Another bidding war on our hands, apparently. Victory Capital offering to buy Janus Henderson for $57 a share, topping Trian's bid by 16%, who was in conjuncture with General Catalyst. Joining us now is Bloomberg Intelligence analyst Kevin Ryan in London. Kevin, this is a really fascinating saga because Victory had before tried to bid for Janus Henderson and before had a higher bid than what the current buyers are offering. So how will this one make a difference? Is $57 enough to wrestle Janus Henderson away?
I just don't know. And have they come too late? Because Janus Henderson seemed happy with Trian and General Catalyst. But what I can say is that the Trian bid is offering 1.5% of assets under management, and Victory are upping that to 1.8%, which I think is quite toppy historically. So 1.5, 1.6 times is the sort of average.
Janus Henderson and Trian, though, have historically worked closely together. I mean, that relationship must mean something.
Yeah, I guess it does. My sense is that if they go with Trian, there'll be another deal to put them together with another asset manager. Because I think what we're seeing here is that Janus Henderson has got just under $500 billion of assets under management. And in the game of running assets now, that's just not quite big enough. And it seems that the starting point is $1 trillion now, which is just extraordinary. But nonetheless, it seems to be the benchmark of being competitive in a market that is being brutal on margins.
Kevin, why is that? What has changed that makes this so necessary and that margins have gotten so compressed?
I think it's the rise and rise of trackers and ETFs.
But Kevin, isn't that an old story? I mean, we've had trackers and ETFs for a while now. Why is a consolidation just taking place? Because I think certainly active managers like Janus Henderson have been reluctant to say, do you know what, the market's moved on. They don't want active management anymore. They don't want all these people sitting in fancy city offices. So it's taken this amount of time for the penny to drop. But top lines aren't growing. Your costs generally go up, even if you try and keep them flat, at around CPI, 2-3%. So this has been relentless over the last decade. And as I say, I think the penny's just beginning to drop with managements, that they just need to be bigger.